Good evening, everybody. Looks like we got a good group here. Welcome to the Hurley Investments Market Commentary, October 4th, 2021. Thank you guys for joining me this evening. Kevin, as I think he mentioned, is at a Raiders game tonight off in LA. They're playing the Rams. So he has turned it over to me tonight, and I'm excited to talk to you a little bit. Yes, thank you. I already got some people saying yes, they can hear me. So, just a little warning. I'm feeling a little crappy and under the weather. I went and got a test tonight to see if I have COVID, but I don't know until tomorrow night. So that's fun. Don't feel terrible, just a bit of the shivers and aches, muscle aches, and that's mostly it. So because of that, I am going to go ahead and just a little business here at the start. I am going to cancel the Thursday morning at 10 o'clock trade findings. So anyone planning on joining that, just know nobody's going to be there. And we'll stick with tonight, which a little more important information anyways. And we're good to go. All right, so how am I feeling? These pictures. Does anyone feel like these pictures are speaking to them? That's it, I've had it. I quit. I love the frog getting eaten by the stork. I think that's a stork. Choking him out so he can't swallow. I liked that one. My little 6-year-old boy caught a bunch of toads in Colorado over the summer, and we brought him home, and he just absolutely loves them, and doesn't love to feed him every night, which means, of course, I'm feeding him. You dads with boys know what I'm talking about. So that's fun. But yes, our market has kind of been crap the last couple weeks. I really liked what Kevin had to say last Monday, and just kind of walking people through, walking you guys through the thought process and what we're looking at and trying and seeing. But a little bit about what I want to talk about. I keep getting questions and keep thinking and arguing with Kevin back and forth. We like to play devil's advocate one with another. Sometimes he's the devil, sometimes I'm usually the angel. He's usually the devil, let's be honest. But yes, there hasn't been a shortage of frustrating days and a shortage of frustrating, I won't say the conversations are frustrating, but because I feel like we're a good team. But yeah, we talk about and we do everything we can. We crunch the numbers. We look at everything we can to get the best solutions and best stocks, and we protect at the times we feel are best. So, what the heck? Why are some things just not coming through for us this year? So, what do you do when things get tough? I'm sure you guys have already read this as you heard me blabbering on. And pretty much what I just said, we're going to stick to our process, methodology, because it has proven to be the best way to invest in the stock market since the inception of options. It's what we do, and we do it very well. So, I've kind of given you a preface of what we're going to talk about. Let's just go over big picture and some of the things from last week. I've plugged in same things that Kevin likes to plug in here, briefing, big picture. Really nice to see this every week. Just going to highlight some things at the bottom. Demand is key right now. If companies can point to a continuation of strong demand and an ability to offset higher costs with accepted price increases, then the market should be more forgiving of warnings tied to cost pressures. But basically, if businesses are going to increase prices a bit to offset some demand problems, it should be a good thing in the long run. Just continuing on, that's not to say it is going to forgive and forget altogether, but it should have more patience for companies that continue to experience robust demand for their products and services. So basically, if the demand continues and stays there, we'll be able to weather some of the supply issues. Because our problem, if you know, been paying attention, our problem isn't that we don't have we don't have a strong economy, and our problem isn't a recession. It's simply the supply of goods. The demand is there. Does that mean that things couldn't have been managed a little better on the government side? No, I think they've been shooting themselves in the foot. We have plenty of jobs, like 11 million jobs, waiting to be filled, and you have to say a major reason why they're not is because the government is paying people to stay at home. That's kind of maybe a mean way to say it, but that's kind of the true way to say it. Oh, I like this. We expect to hear plenty of good earnings news for the third quarter, but we also expect to hear plenty of talk about supply constraints and cost pressures. Hopefully that will be mitigated with continued talk of robust demand and repeating itself there. Without it, peak earnings concerns just might lead the stock market to a lower place by the end of October. Nice market recap. Just at the bottom here, in economic data next week, the first full week of October, Q4, all eyes will be on employment data for the just ended month. Private sector September jobs will be released Wednesday by ADP, followed by the Labor Department's weekly jobless claims. We'll get to more of those down below. So, but I kind of wanted to talk a little bit about where we're at and why. And we just kind of show you performance. Go down the list. So the market last year, kept saying, oh, well, interest rates have got to start coming up soon. Interest rates are coming up. Bank of America really didn't do great. Banks last year really didn't do great. But what's changed this year? I know I'm kind of leading you on to answer, but it's a trick question. Nothing's really changed. Yes, there has been some 10-year yield that has come up slightly, but this is where you kind of look at the stock market and you think, man, what gives? Last year you were saying interest rates are going to come up and these bank stocks aren't getting the love until this year. That story hasn't changed, right? Apple. Costco was all just a bunch of calls. Great play there. Apple. So short term, pretty awesome to see nearly making every dollar on the way down for Apple. Protected up at 150. What's Apple doing for the year? Basically what this means, aside from some leap calls that have lost value, time value, haven't really contributed much on the Apple front, our shares are doing great. Well, they're doing pretty good. Let's look at a chart at Apple. I got a bunch of these year out charts. Apple. So Apple wasn't always pretty roses. We had a pretty crappy start of the year with Apple. Why is it giving me 9 months? Not sure why. Let's see. Let's change this to 1 year. There we go. Much of January, flat earnings. Let me get my pen out here. Actually, this is a pre-earnings run. Earnings fell back down. Pre-earnings run sideways, started to fall back down. Lots of sideways. Especially the last few months. Sideways, sideways. We never like sideways. Great pre-earnings run here. So Apple year to date is up. We're doing pretty good. In spite of some crappy sideways moving and fall downs after good earnings. I mean, last earnings on Apple was incredible, and it seems like it just can't get the love with earnings. I think we've done a pretty good job making up a lot of the downward runs on those earnings. So what else are we looking at? Let me erase these. We know the banks are doing good. Facebook. Man, Facebook's stank today. What's wrong with you, Facebook? They got hit with a bunch of problems. More of the same with their their issues on how their platforms are bad for teens, and they had an outage. Those of you that have Instagram and Facebook, you know you couldn't really use it most of the day. So it kind of got hit with a couple things. Nice little bounce though on the 50-day. Excuse me, not 50-day, the a pivot point there. But we're not doing terrible in Facebook. We've still got profit. This is one we got in somewhere in the middle of spring, I believe. My memory is not serving me great right now. It might have actually been this summer. So only a few of you have Facebook shares, but kind of a sucky day in Facebook, let's be honest. Get back to our shorter term here. Kind of a crappy day in Facebook. And after a few days of holding this 340 level, just kind of fell right through it today with all the bad news. I chose not to protect it. I believe we're going to get a bounce tomorrow. Let me just look at the after hours. Up a little bit after hours. Kind of mixed pre-markets. We'll see how it goes. But what's the deal with this? I mean, Facebook is the only place you can go where you can invest in a company that can market to 2 billion people. Your choices are extremely limited. Facebook is going to do just fine whether or not any of the problems that everyone's worried about come to pass or not. Every single time we get an antitrust problem, we get this sharp downward move and people buy the dip. Maybe we won't get that till the 200-day, we'll see. But long term, I like Facebook. What else are we looking at? Boeing, Under Armour, and Disney has been some tougher ones this year. Let's take a look at, already got Under Armour, we can come back to that. Boeing. Let me get my pen out again. Sideways. Sideways. Kind of earnings. Sideways here. Somewhat bearish. Earnings. Sideways for a few weeks. A little sideways. Sideways for a while. So is anyone starting to spot a theme? While you're thinking of that, let's see. They opened 210. They're up $10 ish, $13 for the year. Disney. Why has Disney, oops, I always make this mistake. Got my highlighter on and I need to turn it off. Disney. Sorry about that, Ida. I'm not sure what the problem is. Let me look at Disney though. Here's the beginning of the year. Opened up. I can't see where it opened up, but around 180. Fell. We did have some protection on, I remember, through that period. Not sure how you trade this. Couple times getting up, we did get some protection on some points. But I mean, look at Disney for most of the year. Sideways. Sideways. Little jump here, but sideways. Sideways. Fell a little bit, but generally going sideways. Are you starting to get the theme? Let's look at Under Armour. Oh, I already have it up. Let's just make it easy. At this point, I hope you're saying, yeah, Keeve, I know, we get it. Kind of a big range there, sideways. Pre-earnings run, I believe, sideways for 2 months. Pre-earnings run, some ridiculous jumping around, then just starts to fall. Sideways for another several weeks. Leg down, another sideways. Couple of, more like 6 weeks. Nice run up. I'm pretty sure this was post earnings. I believe this was too, actually. And bearish since then. Couple things. So obviously, sideways moving stocks don't work great when you're paying money to protect them. Get this back on left bias. Oops. Let's see. Kevin usually keeps it bold for whatever reason. All right. Oops. So this is 30,000 foot view of our portfolio. Our frustrating ones, I'll say our losers. Gone sideways. I'm pretty sure that's one word. Much. I'm just going to blame it on my current sick condition here. Our loser stocks have gone sideways much of the year. Some of them, Disney, Under Armour, have gone up. Let's see, I can't remember. Disney really hasn't moved. It's more like Boeing and Under Armour have gone up after earnings. And Boeing looks a lot like Disney. Boeing, Under Armour. Have gone up after earnings and then fell and went sideways. So why, this is the answer to the question, why do those stocks, why have they been so crap this year? Some of them are actually up from the beginning of the year. Under Armour is. Started the year down here at 17-ish and a half. Problem is too much of it has gone sideways and gone up after earnings when we're protecting. We make money up when stocks fall. Our stock makes money when it goes up. But if it goes sideways for a length of time, it tends to cost a little bit, and those stocks struggle. So why stick with these? Why not rotate out? I'm going to put this in its new. Did great with Apple. Banks have been awesome. Why wouldn't we want to rotate out? I'll throw that question to you guys. Let's look at the market. Here's the year for the market. Oh, beautiful drawing. Market's just gone up. The market's rotated, right? Some of the energy stocks, etc., etc. So what is your thoughts? Why stick with the stocks that are frustrating ones this year? Don't be shy. So William, thank you, William. William says, because the story is still alive. I like that. As long as, and I'll say, I use the word narrative, but I like story too. I'll use story. I like that, William. Part of the reason a couple of those stocks have been crap because they had a great year last year. But not a lot has changed with regard to the reopening, because the reopening trade is still coming along. Disney still has their parks to open up. They've got all of their movies are going to be making more money on because they can release them on their own platform. Things are looking great for Disney as a company. When they don't have to pay off the theaters and make 100% of the revenue, that's pretty awesome. So why have they stank? Because everybody's still focused on the parks. That's been open. Forgive me while I talk and write at the same time. Because everybody's just paying attention to one thing, and there's a lot more to it. I'm gonna say the streaming app up is brilliant because people need their kids to be occupied I'll say entertained. Occupied kind of sounds bad. Disney fits the bill. I'll say Disney owns happiness. With regard to kids. The happiest place on earth, right? Disney owns happiness. That's their business, happiness. I already talked about Facebook today, which kind of more of a short-term explanation, but geez, again, where else are you going to go for a company that has access to 2 billion people to market to? Where are the companies that are marketing and advertising going to go? It's just more noise. That's all I'm going to say for Facebook. What else? Boeing. I mean, you guys know the story with Boeing. We've talked about it up and down. a lot more trip taking. We need to see more business trips. Webinars, web meetings are not going to be the sole thing forever. It's glitchy, it's awkward. People don't like it, really. Some people don't like it. I like working from home. But the only thing holding that back is more people vaccinated, and Boeing's going to do just fine. It's still ridiculously low, and I like where things are coming back. I've talked a million times about Baidu, so I probably just leave that one out of it. Basically, with a bunch of these stocks, we've had calls that have call options that have kind of made accounts more volatile and have kind of dragged things down on these big down weeks and days. But most of our stocks that are up for the year are doing well. We've got Apple making up a nice chunk of this downward bit. But for Baidu, that's kind of been crap. It's gone up. We've taken profits when it was way up high at 300 and bought more time, came down. So some of the calls have gone against a good bit of management for Baidu. Now, I said I wasn't going to talk about Baidu, but I kind of just want to look at the whole year. Started the year around 220-ish, went all the way up to 350 almost intraday, all the way back down to 146. Baidu's down for the year. We're only down 9,000 on, where are you, Baidu? $2,300,000. So I really like how we've been able to protect Baidu on the way down. We haven't called them all right, and please don't think I'm trying to toot my own horn. But some things have gone very right this year. Some things have stank. Some things have been great. Moral of the story: we don't change our philosophy in undervalued stocks. We're a little bit stubborn. And in this case, I think it's a great thing. We could try and chase the market. We could sell our losers and buy other stocks. But there's no guarantee those will go up. There's no guarantees we're going to outguess the market, and the stocks we keep moving around to are going to beat the market. Very difficult to do. So we stick with our Warren Buffett value investing, stick with the stocks, and as long as the story continues to play out and the story and the narrative is the same, then we're going to stick with those stocks because we have a ridiculous amount of opportunity in the future. Disney can get back up to 200. Boeing can get as high as 400. I can't, in good conscience, sell these stocks and quit on them when there's so much opportunity to be had. We still have just an overall market and economy view. We still got a this was mentioned a bit at the beginning, but we still have an infrastructure bill. Let me say, what are we looking forward to into the end of the year? You've heard Kevin talk about this. Still have an infrastructure bill. Yeah, we might not get the 3.5 trillion of other goodies that our Democrat friends want to squeeze in there, but that doesn't mean we're not going to get an infrastructure bill that has more partisan support. Christmas rally. It's a cyclical. Cyclical reason, excuse me. You think about last year, or even those of you the year before. Our big gains came in the last quarter into the end of the year. There's no reason why that can't happen again. And no reason, if it doesn't, that our stocks can't continue up as the reopening continues to roll forward. Any thoughts, questions, disagreements? I'll also note, if every time that every moment that Warren Buffett wasn't beating the stock market, he completely changed his philosophy and went and tried to chase it. Do you really think he would have been as successful as he's been? I just don't think so. In fact, there's not a chance. All right. Moving on. Where will our markets end this week? I am going to say lower, because that seems to be the trend at the moment. I'm thinking usually we get a 10% correction before we get a Christmas rally. I forgot to mention this one that I said verbally. 10% correction. We're about 5% of the way there. Let me get our screenshots here. So S&P is about 5% of the way there. Dow is only down a little bit. NASDAQ closer to 7%. So NASDAQ is closer to that 10%. Got it. All right. Stick these in here. Oh, come on, Apple. Do your finger swipe stuff. So all are bearish. Need another 5% from S&P, getting closer on the NASDAQ. Kind of splitting the difference of that 5% with where will our S&P end October. 2.5%. Who knows that we might start our Christmas rally at a point at the end of the month. So splitting the difference there. Not much in the way of important earnings. As I mentioned at the beginning, let me get back to you, Ida, just a sec. Talked about at the beginning, Wednesday we've got our employment numbers. Thursday, continuing claims. Those will be important. And then, of course, Friday, average work week, employment rate, etc. So that's going to be our market movers for this week. So how am I looking to trade? We're just looking to start to see where we can get protection on for earnings and what stocks we can hopefully leave alone a little bit till we get a little closer. Looking at you, Disney. Disney has basically bounced on a 170 for the last several months. So that's why we don't have protection on Disney right now. Still wanting to see that bounce, and for heaven's sake, it's gone sideways for stupidly long. So if we can avoid having to spend too much before earnings, hoping to wait as long as possible. We'll see. But I got my list here of our earnings dates that we're looking at. And that's pretty much it. I've got some articles for you to read. I'm not going to go over them. This is about the Facebook thing. If you need to know more about that. A little bit about the China trade. So definitely check those out as this gets posted. I saw some questions coming in. All right, Ida, you want me to look at Microsoft and oh, Outlook was your problem. Okay, gotcha. I'm understanding you now. No problem. Microsoft. So it's kind of holding at that 30. When is their earnings? Excuse me, not 30. They're 282-ish. I would say if let me get a closer look here. They had a decent bounce right where you would expect it. 280. Oh, my wife calling me. Excuse me. 282 is looking like a bit of a support level. Kind of fell down and held it a little bit. I think that would be maybe your line in the sand, Ida, if you're looking to protect Microsoft. Microsoft has been a little more loved than Apple this year. Let me see. Not Apple. We go out to a year again. Yes, much more loved than Apple this year, when Apple was just ridiculously awesome the last 2 years. So if you don't already have it protected as it broke that 50-day, let me look where earnings are at. Let's see. No, sweetheart, I can't talk right this moment. All right, so Microsoft. All right, just trying to get where we need to. So estimated October 26. So my recommendation, I guess, is to draw that line on 282-ish and protect if you need to if it drops below that, Ida. That's what I would look at right now. Yes, October 26. You got it. Estimated though. You can wait another week or two, great. If not, I would go out to maybe second week in November, something like that. Other thoughts or questions? No problem, Ida. You guys are a bit quiet tonight, which is totally fine. I'm a little surprised there aren't more questions, but that's okay. All right. Not seeing anything come through question-wise or more questions. Thanks, Ida, for your question. Yeah, as frustrating at times as things can be, if the reason you're invested in some stocks is still the reason, stick with it. trust the process, and we're going to look great. Sucks that it's not great right now. Never feels good. But again, stick with the process. It works. All right, guys. Any other thoughts or questions? That does it for me. I hope you have a good week. Again, I'm going to cancel Thursday morning. Not the greatest week to be trading anyways. Just too messy right now. Doesn't look like I've got any questions coming in, so I'm going to thank you guys for the evening. Take care, and we'll be back with you next Monday. Take care. Bye.